Okay, so it doesn't happen every day that we have such a panel. So let's agree to one thing, okay? I want to state some facts early on, and at the end of the panel, we're gonna find ways, okay, to reach a certain consensus, okay? So let me show you. In the Middle East and North Africa region, according to Magnet, 366 deals or investments happens in startups in 2018, okay? 366 deals, and the value was $893 million. Remember those numbers. Out of that, 12% went to fintech, which was the highest growing sector across the whole MENA region. Now let's go global. Okay, remember? 366 deals, 893 million across all startups, 12% only in fintech. So that makes it 43 deals only. 0 unicorns. Now you might argue against that, but we have 0 fintech unicorns. Globally, according to EY, $32.6 billion were invested in fintech. $32.6 billion in 1,164 deals and 34 unicorns. Okay? So at the end of this session, I want an answer to a very simple question. What are we missing and what can we do to make a difference? So next year, I'm hoping we add a 0 to everything. Okay? Let's start with you, Kaushalya. Ladies first. So you're based out of UK, right? For HSBC.
Yep.
What does the world have that the Middle East doesn't have? I mean, we export talent, we export money, we export passion, we export banks, regulations. What do we don't have that the world has? Or actually, what does the world have that we don't have?
Can you guys hear me at the back? Is my mic working? It's okay, I'm all right. Okay, great. So thank you for having the opportunity, actually giving me the opportunity to be here, first and foremost. This is my first time to Dubai. I passed through, but never stayed here, so thank you. So I think I'm no expert in Middle East, but I must say that having come to this conference and having looked up some statistics, I was very, very intrigued by the fact that I think you started out by saying there was no fintech. And I'll start with that point because I think there are fintech unicorns, I beg your pardon. But I would argue that actually there have been unicorns because I think you've got some really great e-commerce unicorn, particularly in the last few years, the likes of Noon. So arguably this whole construct of, what is the definition of fintech and the convergence between the different industry sectors, I think it's sort of forming. So what was historically defined as a technology solution for the purpose of financial services, you can also argue that if you have an e-commerce platform on the back of that, you can provide credit, you can provide payments, and you can make it into more of a digital bank as a whole. So if you look at it from that perspective, I'd say that you already have a number of sort of fintech unicorns, so to speak. But then I guess the question is, which one is going to come up next? Interestingly, when you look at it from a global perspective, and we are a global bank, we are in about roughly 70 odd countries. We employ about 235,000 people. We have the 4 major large sort of lines of businesses. But we typically have what we call as a hub and spoke model, right? So what is a fintech launching pad? And typically what happens is for a particular region, there tends to be a country or countries quite often that help you to sort of pivot into other areas. So example, I would say, is Singapore being a launch pad for Southeast Asia, Hong Kong being the launch pad for China, US as a whole, UK being the launch pad for Europe. And what has been really interesting is that I think you typically have sort of the 3 sort of pillars that support the ecosystem. One is a regulatory piece. The second part of it is a corporate activity itself. And the third, but not last, is the financial services support. And here it seems like, and similar to what I've seen in the UK being the first regulator, the FCA, that set up the sandbox, and then we have also great many initiatives we talk about later. I see that Dubai, as an as a country as a whole, a UAE, has done a lot of efforts, particularly in the last year or so, to actually help entrepreneurs and investors come into the country. And more importantly, I think one of the things that Mirna, you talked about is the ability to attract talent and retain talent. And again, in that perspective, I'd say that the fact that we made it easier for people, particularly university students, to have visas for over the 5 or 10 year period. I think that is again a good path in the right direction. So similarly, I'd say that's one. The second part of it is obviously the financial services support, and we can talk about the corporate VC activity that we have. I think you mentioned some numbers, around 30, globally we have invested last year alone. I think it was about 30 odd billion that got invested out of the $150 billion to date, of which a third of it is still a corporate venture activity across the globe. So I think that's the second part of it, and then the ecosystem that we will talk about more.
Thank you. So before we get into the Middle East, Suren, what does, Kaushalya mentioned something about corporates, okay, banks. They have to start from deep within to actually play a role in the market. What has Credit Suisse done to actually activate that kind of ecosystem?
Yeah, so it's interesting. I'll comment on the first question. I think the Middle East have got all the key ingredients to grow unicorns. I think it's a matter of a maturity curve. The UK only over the last 18 months have you seen unicorns come online. So I think the supportive regulatory structures, the banking and fintech collaboration is key, and I think it will happen. But in terms of what have Credit Suisse done in terms of engaging with the ecosystem, I think we've done a few things. We've kind of been in innovation theatre land over the last 2 years. We've met with every fintech, we had every conversation, we've had many POCs. And now it's about becoming more focused about really understanding what business problems you want to solve, what alpha opportunities you want to pursue to work with fintechs. And then once you've funneled those opportunities, you can be very specific in terms of engaging with the ecosystem, whether it be fintechs in terms of the problem you need them to help you solve, whether it be the regulators in terms of how you want to engage with the regulators, or actually if you want to co-create with your peer banks as well. So I think we've gone from mass market innovation theatre to now just being more funneled and focused in terms of where innovation can play a part in terms of delivering your overall strategy and delivering value to clients. And then you set an outreach structure to the ecosystem, because really collaboration is key in terms of delivering on innovation. And I think, so that's kind of how you engage with the ecosystem. Then internally, I think it's a culture thing, as Scarlett was talking about earlier, to bring management primarily, but also the organization in terms of the experimentation journey. It's okay to fail, but I like how Scarlett positioned it in terms of creating that experimentation factory. So it's kind of BAU. And then making sure decision-making, whether it be in procurement or leadership, is very agile.
Suren, let me stop you here, okay? We've got a lot of bankers, and they listen to consultants day and night. 40,000 feet, pitch decks, we don't want that, right? Do we want more decks? No, right? We don't want to stay 40,000 feet. Get us on the ground. What does a bank need to do to activate innovation internally and externally? Real terms, okay?
Yeah, I think the real term is really having that business problem funnel. Understand where the opportunities are. In your front about value chain, really understand what you will solve by using innovation.
Internally, right?
Yeah,
so from your own model, is it?
To me, that is number one. Really sitting down, understanding your front about value chain, from trading to client servicing, through the middle office, through to compliance, where the opportunities to really solve a problem by innovation or collaborating with fintechs. And then the second thing I would say is around investment, how you approach investment. Everyone's got a change investment budget. You need to think about how you chunk up that budget where, you can actually fund the tactical protection of franchise initiatives. But then secondly, Horizon 2 is how do you look at transforming your organization and looking at adjacent markets. And then you've got a section of your budget ring-fenced to look at more moonshot future finance, right? So those two things about, here are my problems I want to solve through my front to back value chain, here's how I apply my budget accordingly, opposed to using it to build tactical things all day long. And then thirdly, the culture, which is really important, and I include the decision making. So to me, what I'd say is that we're not sorcerers in terms of, hey, we're magical wizards. We actually just need to have the discipline in terms of looking at what our business is and how innovation can help.
Thank you, Todd. Let's come back to the Middle East. You've got gentlemen from Oman, from Kuwait, UAE, Lebanon, everywhere. Let's talk about regulations, because it seems that everybody is really excited about it, and everybody, it's very easy to blame the regulators. They're not opening up. How can we convince regulators to really create the landscape that can actually help us innovate? Or maybe, as Suren said, we need sorcerers to come in and help us.
So I agree with you. It's not the regulators' full responsibility here. It needs to be driven from the banks and from all of the financial institutions to actually want to do something. And what happens is, I think there's a desire to do something, but there's not a real traction to actually do something. So if you look at it outside of the bank, if you compare, I lived in London for 6 years. You compare London ecosystem to this ecosystem. Now I live here. And if you compare those ecosystems, in London I can open a business for £13, and that's all it costs me. I can get a bank account the very next day, or the same day, if I open that company. I can work anywhere I want in London, or outside of London. I don't have to work in a certain zone for this or whatever. And this type of thing is what attracts entrepreneurs. Entrepreneurs do not think in these free zones, and I know that's where this has gone, and it's really brought in a lot of businesses, and it's great for larger corporates, but for the entrepreneur, that's not the way they think. They work from here one day and here another day, and to have a license in one place and not be able to work in another place, it completely destroys the entrepreneurial mindset. So I think what needs to happen from the outside standpoint is a change and a shift to focus on the entrepreneur to bring in the talent. Then the regulators and the banks and those who want to innovate need to be the champions for those things. Because if they rise up and say, this is not good enough, we need to recreate a different environment, then it will actually happen, because they will be pushing towards it. So just my 2 cents on that.
Yeah, actually this theory about collaboration between countries is very important, because UAE on its own is very small, Bahrain is small, and none of these markets will move the needle, not even Saudi or Egypt alone. So Fabian, you've built a model that's actually designed around collaboration. 12, 15, 16 banks working together. Hello. Collaborating and actually working with startups, similar to what Fintech Galaxy does, but you're more focused on the EU market, which is actually very powerful. But then you've got a unified set of policies, right? So what's your advice to the MENA ecosystem players, regulators, when it comes to collaboration between ecosystems? So Bahrain, let me just mention as an example, okay, just to be very practical. Bahrain has open banking. A lot of banks in Bahrain operate in Egypt. If Egypt is convinced to have open banking as well, what's the impact? Cross-border.
Thank you. I guess maybe to bounce back on the unicorn thing, and then I'll come back to your question.
Can you...
You hear me?
Yeah.
Yeah. You don't wake up in the morning and say, today I'm going to create a unicorn. It doesn't work like that. So I wouldn't be too much blindsided in the region by saying we need unicorns. I think unicorns is a consequence of having an ecosystem that works. But to have a unicorn, you need a big market, because a unicorn is actually something that creates value for lots of clients, right? That's the purpose of having a unicorn. So, and in Europe, it's not perfect neither. As you rightly said, we build a network of 18 cities. I'm based in Brussels, but Brussels is not a financial center like London is, but it's a diplomatic center. So we work very close to the EU, so we work a lot with other centers. Why do we do that? Because we have 200 and plus startups in our ecosystem, and we ask them, which countries do you want to move next from your own country? And they all mention not the US, not very far away. They just mention countries that are close to where they are today. If they are in the UK, they're probably more fortunate because it's already a market in itself. But if you are in Belgium, you want to go to France and Germany. What prevents them from doing so is regulation sometimes. Because to your point, if they have a solution that is accepted under Belgian law, it might not be the case even in Europe, in Portugal or in Spain. So I would strongly advise regulators in the region, if they want to create a tissue that is favorable for creating unicorn, to have a regulation that is as pervasive and open as possible, in as widely accepted as possible, because unicorn needs big markets.
Thank you. Can I have where's the microphone? Microphone? Can we give it to Rami? Rami from Egypt. Can we give a microphone to Rami, please? So Rami came all the way from Cairo. Rami, stand up so she sees you. So Rami runs an accelerator in Cairo in partnership with Startupbootcamp. And you're obviously a VC and you invest in startups, and you're now working with like 10 startups in Egypt. Now Egypt on its own is a very interesting ecosystem, right? What's your wish list? Okay, if you wake up tomorrow and you have all the, the rulers of the Arab world sitting in one room, and you go in and they tell you, Aladdin, just give us your, what's your wish list for your startups to actually become unicorns? What do you want?
Definitely more funding, exposure to different economies and different markets, because unicorns do not operate in one market. That will never happen. So they need to get exposure to the GCC area, they need to get exposure to the Levant region, to North Africa and Black Africa. Funding is a problem in the region, let's put it this way. Maybe the GCC startups are a little bit more lucky, or who make it to move to the GCC area are a little bit more lucky, but for startups from Egypt, from Lebanon, from Jordan, from Morocco, Tunisia, may face it a little bit harder to raise funds. Number two is pushing banks to integrate with fintechs more regular by putting certain KPIs, by enforcing them to work with and open their strategies and innovation strategies to bring in the fintechs to work with them. For example, in Egypt, it's a bank-led model, so fintechs still today cannot officially communicate with the central bank. It has to happen through a bank, so you need a bank always in the formula. So I wish that would change one way or another. The third thing is clarity in regulations. There is no clear regulations when it comes to fintech in Egypt specifically, so we need more clarity about that. So that would be the wish list for me.
Thank you.
Thank you.
Kaushalya, you heard that. So you're a bank and you have your innovation department. You have three major focus areas, right? You've got strategy, you've got innovation, and you have investments. So let's talk about investments. In Egypt, Rami, correct me if I'm wrong, what's the unbanked percentage, the financial inclusion opportunity? I think
33% of Egyptian adults are only banked.
Are banked.
Banked, yes.
So you've got 65%, 67% of Egyptian population. How many is that? How big is the population?
Trust me, that's bigger than the entire GTC.
Can you imagine the opportunity? If you invest in one startup in Egypt, you get access to millions and millions of consumers. Why don't banks think that way? I mean, put $100,000 in an Egyptian company, you don't need more. You see the ripple effect and the impact. What does it take for a bank to start thinking that way in terms of really on the ground working with such economies? Egypt, Saudi, Jordan.
I mean, that's a great question. I think I'm just going to touch on a few things before I get to that point, because I think it's important in the context. So the gentleman to the right, said about companies don't just wake up and say we want to be a unicorn, right? And that's a fair statement. Quite often you need the scale, you need the ability to be able to port the solution to a wider population. So I think it quite often comes down to that. What are your key hubs or key markets? how much of the solution can you actually port and scale? So quite often, even as a local market, this could be an amazing solution or a company that it serves the local population. It doesn't, it may not necessarily be able to get traction elsewhere. So when you're thinking about it as an international bank, quite often it comes down to what are the key propositions that we can actually scale, right? So that's number one thing. The second part of it is, I think, the regulatory construct. I'm a big fan of regulators myself, and particularly when it comes to the FCA, which has sort of taken the lead on a number of very many things. And we often talk about not having the ability to sort of work together as regulators. But, I think a lot of the recent efforts has been made, particularly around, I don't know how many of you have heard of GFIN, which is a global financial innovation network, which comprises roughly about 29, 30 regulators across the globe, including, I think, 3 or 4 countries in the Middle Eastern region. That's a great example of a regulatory effort that's trying to bring together the commonality of standards, because quite often, the reason why, to my point about why we can't port some of these solutions is because there are restrictions around data wars, data portability, things that we can take in and out of analytics, even data companies. There are really interesting companies, but we can't really do much with that elsewhere. And so I think that's the other part of it that comes into mind. And then one last one that I don't want to mentioning it is also what I call as the financial treaties, right? How do we help companies to go not just externally, but also come inbound? So the UK, again, with the Department of International Trade, has forged partnership across sort of 5, I think now maybe 6 countries, where they're actively taking pilot programs over a 6-month period to help companies establish themselves externally as well as inbound proposition as well. So I agree with you, I think, Rami, you said talking about, funding, access to capital, but if you look at, there's billions of sort of dollars that are out there, but how do you actually get access to that? And quite often we as a venture capital firm, and we have a $200 million balance sheet that we draw down from, we look at companies that are strategically important to us that we can then grow to new markets with. So that's one of the important categorization that we have. And the second part of it, I think you also mentioned about the regulatory landscape in terms of commonalities. And I think, again, in the Middle Eastern region, I don't know how much of the open banking and the PSD2 prospect has actually come and hit here, but I think that's been a good effort, again, from the government and the regulators to push that kind of agenda. So I'd say, yes, recognize that, some of the markets sometimes get often neglected, but it is not by design. It is just by the virtue of the fact that, quite often you have to think about the strategic priorities. And, Mirna, we talked about it earlier, what are top 10, group strategic priorities. And, we have to work through that, and often they change with climate. And, we see quite a lot of, macroeconomic trends that are sort of affecting the way that we invest, right? What's happening between China and the US in terms of trade wars, and what's happening with the Brexit in the UK. All of these, again, create opportunities between regions, Europe and Middle East, for example.
Okay,
and Middle
we're
East
going to talk about cross-border collaboration. Let me just comment on one thing. So, regulators, the problem, and we're expecting from someone who's actually mandated to make sure that the system is risk-free to go crazy opening up the market. Regulators are not meant to do that. We are meant to push them in a decision where they don't have any other choice but to open up. So let's assume, that we ignore regulators for a minute and we say, let's create some education about fintech, about digital banking, about all of that, and let's put more money into startups so we empower them, we work with them, and we get them to actually create unicorns that cannot be ignored. Who's got the money? Who's got the money? I mean, you guys in Kuwait have a lot of money, but let's think of the people on the ground. Credit Suisse sits on billions of high net worth, money-owned individuals. How can you convince? Is that me?
No.
Maybe too much. Oh, okay. So, Suren, you manage funds owned by, GCC high net worth individuals, and you guys convince them to put them in equities, bonds, oil, commodities, derivatives, all kind of, really boring stuff. Why don't we work together on convincing 1% of all those people who work with you and bank with you to actually invest in startups as CSR? It's not going to scratch it's not going to dent their pockets, I can guarantee that. How does that work?
No, I mean, well, actually, what I would say is there's huge interest, both from ultra high net worth, but also institutional money, in investing in startups as an asset class, but in particular, the fintech sector, because of the popularity of emerging tech and it being the future. So I don't think there's actually any hesitance to actually invest in that space. But I think, like any investors, they want to understand the industry, they want the transparency, they want to understand the product. And I think, going back to the question of how do we create a unicorn, how can the government, regulators help? I think, look, the fintechs need to have a product that solves a problem. We've talked about it already. It needs adoption. It needs to scale. And I think, I think that's the big problem we face is how are fintechs scaling? We're seeing thousands of fintechs. I think globally the last count was 15 to 20,000 fintechs. But how are we taking those to really sustainable, scalable companies that approach unicorn status? And I think the government and the regulators can help a few different ways. Number one, creating that bridge of collaboration with themselves, but also the banks, helping the entrepreneurs really run a business, because a lot of these entrepreneurs sometimes have never run a business, helping them with the skills problem to make sure we have the talent to really hire and evolve these companies. But then some of the more technical aspects is when a fintech goes into a bank, for example, helping fintechs think through data privacy, thinking through IT security, because really if you think about where it falls down with a bank, those are two massive areas that it falls down in terms of going from POC to actually a production use case. So I think there's real appetite to invest in the sector, but we need to be able to create sustainability, and sustainability, that means all the ecosystem players need to come to the table to see how we can help these fintechs scale and grow their businesses in a very controlled way.
Thank you. Any questions from the audience? I have tons here, but I just want to check if there's any questions? Okay, Fabian.
If I may, I think the challenge for a bank to invest in startup is that they are not a VC originally. VC invest in startup for return, in any startup that will give them return. The challenge for bank, and I've worked with several corporate funds in Europe for banks, is that it's just not like that. The venture fund of the bank will very much, the one I know, tend to invest in companies that make sense for the strategy of that bank. So you need to accept that there will be things that might be more attractive financially, they will not invest in. Yeah. Because that's not part of their strategy. So that's a bit the difficulty when you run a corporate venture fund in a bank, is that you have to get a line between the strategy of the mothership and the desire to make return. And that's where a VC, pure VC and bank VC differ.
Nice. Actually, I was reading this book. I don't know if you ever read it. It's called The 5 Languages of Love. Whoever read this book? Yeah? And it talks about the different languages that two people communicate with. And I think if we apply that, Todd, what do you think between banks and startups? Because let's agree on something. They don't speak the same language. And banks try to understand startups because, come little boy, let me see what you have. But then startups are sometimes very arrogant. They think, I've got the key to paradise and I'm going to come and remove a bank of 50 years old. They don't understand that there's a legacy, there's trust, there's a database, there's a lot of other things. So how can we bring these 5 languages of love love between regulators and startups will never happen. So let's bring this love between startups and banks. How can we train startups to get them ready to deal with banks, to do the right pitch, to do the right implementation, to be less risky as well?
So first of all, I have read the book, and so applying that to bankers and startups could be a little risky, because some of those meaningful time is good, but meaningful touch may not be the right thing to go on that.
That's implementation, technology.
Yeah. However, I think it's a good point, because if you look at corporates, banks, corporates in general, whatever, I always look at it like a really big gear that goes really, really slow. And a startup is a small gear that's just humming, going really, really fast. You put those two together, it's just disaster. Yeah. And this is what we see happening all the time with the startups we work with, putting them into the corporate environment, and they just get crushed by it. So I do think that there needs to be that medium gear that kind of helps, helps these relationships foster. And that means by training the fintechs so they know how to engage, but also by helping corporates speed up their own internal innovation process. Because this, to me, is a bigger problem, because startups can learn and adapt really, really quick. The large corporate takes longer to learn and adapt. And if it doesn't come from the top and the culture is not shifted, it will still never happen. Because at the end of the day, you will have the compliance people and the IT people and everybody saying, oh, no, we can't. When a startup is always saying, yes, we can. So you can see the clash and what happens. So the culture internally needs to be shifted and changed, and that can only come by learning a lot of the principles of innovation within inside. Not just saying you're doing things innovative, but actually doing something innovative. There's something we say to startups all the time, it's fail fast and learn from it. And this is a big issue. Going back to the MENA, is I think that there's something that needs to be adopted and adapted here in the Middle East is it's okay to fail. Yeah. It is okay to fail. In the Silicon Valley, if you haven't failed 3 times, nobody's going to talk to you. So it's a badge of honor in a way to fail fast and learn from it and get better and innovate. And if you move that slow, it's never going to happen.
Thank you. We're running out of time. Okay. I'm so sorry. It's been 0 since a minute. So connected MENA markets, more investments into the ecosystem, stronger bank startup collaboration, and of course, better regulations and more financial illiteracy in the market. These are the key takeaways from today's panel. And I hope that next year when we sit again, we will see another 0 added to the numbers from the MENA region. Thank you all for your input. And thanks everyone for attending this session. Join me in thanking the panelists and see you soon.